Hey guys, how's it going? Welcome to the weekly Watch This Breakdown. Hope you're all having a fantastic weekend so far. So, in this breakdown, I think what we're going to do is go through all of last week's price action on Euro Dollar, and then we'll look at obviously the outlook for the week ahead, and then we'll cover the outlook for the week ahead on the higher time frames for both pound dollar and Aussie dollar as well towards the end. Now, for kind of going over the price action on Euro Dollar for last week. Let's get rid of these. It's kind of annoying. There we go. What was I going to say? Yeah, so going over the price action last week, I think the best way, kind of most effective way to do this, especially kind of going forward, is really just to go over kind of the best and sort of cleanest trading opportunity for each of those trading days, because, as we know, there pretty much always is at least a minimum of one really high probability clean setup pretty much every single day. Of course, there are weeks where there isn't really one within the day. It's not that great, but last week was a really good example of where there was a minimum of one super clean trade from a really clean M15 zone, standard textbook entry model that we see on the M1 pretty much every day. I think it's just going to be a good idea to kind of go over those rather than kind of going through every London session, every New York session, and looking at kind of every possible trade. I think it's better just to really focus in on that on just those clean trades and really just driving home that point that we already know, but of course it's good to see it play in week out, that you only need to catch one or two of these a week, one of them a month really, to have an insane month. Right? So we don't need to go chasing those trades, forcing those trades in the middle of ranges, trying to play those kind of risky continuations in the middle of a choppy range. Just be patient, wait for price to come to those M15 zones that we already know when we start the trading day. We already know which zone is going to be probably the most highest probability to not only play out, but to actually have that, that next swing run, to actually catch a decent movement, right? Rather than just, potentially a little reaction within the range, which of course we can play. I'm not saying that you can't and you shouldn't. I, of course, will still play those as well from time to time. This is more just an exercise to really drive home that point of, that there's that super clean trade from that super clean zone. You wake up in the morning or whenever, the London session is for you, or whatever session you trade, set your alert on that POI, wait for your alert to go off, see if your entry model sets up, hit it, enter, manage your trade accordingly, and you can have an incredible week, month, quarterly, annual return from doing that. So going to kind of cut that rant there, and let's just kind of dive into the price action and take a quick look. So super quick recap of the higher time frames. I will do this in a little bit more depth when I do the outlook at the end, but yeah, essentially weekly, right, we've come off that sort of monthly and weekly supply level at the top, and we're starting to see that supply starting to hold now, and then we eventually got that weekly bearish trend change, right, when we closed below that low, had a little bit of a minor pullback. We've kind of come into that prior buy to sell range, right, tapped into there, and now it's looking like, especially with last week's or the last couple of weeks price action, that potentially we're going to come down and start to test this next sort of demand range down here. But as you can see, that was a very kind of small weekly candle last week, so there wasn't a lot of movement in terms of price trending in one direction. But as we know, and as we'll see, there was still a hell of a lot of trading opportunity within that reasonably small weekly range. Daily chart, price action is very, very simple. Okay, we're in a clear bearish trend with sustained lower lows and lower highs. And then last week, we were looking for price to pull back up into supply to obviously try and catch that daily lower high in order to try and take that daily lower low. Really basic trading, right? But it's super clean. I do love it when price actions like that. We ended up rejecting the bottom of this buy to sell candle range. We didn't quite come up to the daily EQ. And then obviously we've come down and tried to take these lows. Now I will talk about this in a little bit more depth in a bit towards the end. So I'll come back to that in a second. So for our chart last week, well, not the week that's just gone, but the week before that, on whenever that was, last week of October, we're obviously trending to the upside on the 4-hour chart, right? So we're making higher highs, higher lows. We then broke up to the upside, and then on Friday, we sold off pretty aggressively, and then we switched bearish on the 4-hour chart. So we just run with a simple assumption that probably that's the daily lower high in place. The 4-hour has now switched bearish with a lot of momentum. Let's try and see if we can get price to run those daily lows, right? So that was kind of really what the play was this entire week, was do you want to play the longs to play the 4-hour pullback? And obviously when we get signs that the 4-hour is forming that lower high, then we can try and get short to try and target that daily lower low. Right, super simple, basic stuff. Obviously, it pretty much took the whole week to do that, to pull back and to take the low. And there's plenty of trading opportunities within there each time. As price came up towards that EQ, it did try to make a lower low. It pushed up a little bit higher, swept that high, didn't quite tap into supply, and then we dropped obviously down, finishing the week with NFP closing below that low there. So yeah, if I could kind of summarize up what the plays were this week, it was really just playing the longs to play the 4-hour pullback. And as obviously as we start to get in towards the premium of that prior 4-hour leg, that is where shorts obviously become a lot more higher probability, not only because we're at better value for shorts, because we're more in the EQ and the premium, but because it's pro 15, pro 4 hour, pro weekly, pro daily, they were all heavily bearish at the point, right? And that kind of became the easier trade, the higher risk to reward trade. So as I zoom out here on the 15-minute, I've basically got one trade for each trading day showing up here. I'm sure for the guys who've been following the markups, right? You would have seen the trades and probably already know what they are, but I think it's just a good idea, like I was saying at the start, just to go over these. I think this is a good exercise you guys should do as well. Obviously, you've got your daily markups, and there's probably going to be multiple trades per day and per session on there. But just picking that one trade to really study and kind of imprint into your mind, I think going into the next week can really help you just have that abundance mindset as well, right? It just helps you to be patient, helps you to not get FOMO. And you can kind of pick a bit more quality over quantity. So yeah, like I was saying, last Friday or 2 Fridays ago, we came down in towards that low, and then we ended that week with a bullish change of character. We were obviously very oversold. So coming into Monday morning, yes, I kind of got caught up with this a little bit. I was looking for kind of the easy short, looking to see where we're going to continue this momentum, right, and see if we could take that low. But as you guys probably remember in that commentary last weekend, I also said, anecdotally, when we see heavy sell-off usually at the end of the week and then the weekend comes in, more times than not, what I've noticed over the years is that momentum tends to not continue. That's usually when you do see a much deeper pullback, or we range for quite a while. And I don't know why that is. My theory, like I said to you guys on the Zoom call, is because potentially, there's a lot of fear and greed when you see massive momentum like this going to the downside. But then, people have the weekend to digest, to exit positions, to gather their thoughts, right? The emotion is a lot less, so people don't chase it. People don't exit their positions maybe as quickly if they're long. And then you kind of see that move, or the majority of that move, get faded into the first few days of the next week. But anyway, it's not really that relevant. Kind of what I want to focus on is when price did come into that pretty shitty supply zone, to be honest with you. It didn't really achieve anything, right? All it is a buy to sell candle. There's no flip, there's no break of structure. It was kind of just the nearest POI for price to correct back into. So into London, we kind of came into it. You can see that very weak reaction. Now, the moment that price then closes above that reaction, right, what do we know? We know that now demand, or so I should say supply, has now flipped to demand, because we've reacted. We've tried to make a lower low, supply's tried to do its job to go to the downside, but then demand has stepped in and pushed price to the upside. So at this point now, we know this buy to sell range, this sell to buy range, I should say, right? Anywhere within here is where that demand stepped in within this circle, right, to push price up through supply. So now demand is in control at this point, especially when price spikes up through the zone as well. So now, as price is pulling back in towards New York, this was a New York trade, somewhere within, I'll just mark it off, this sell to buy range, there's going to be that demand that is likely to continue price back up in towards the premium. Now, it was quite messy price action. There wasn't anything too clean other than probably that candle there to look for demand, or obviously, the wick, the bottom of that range demand there, okay? So this is where then that becomes kind of the cleanest trade for the day, is to look to try and play that long back up into towards premium prices. Even if you just target this next buy to sell candle, which is where I've put the profit target, there was a 10R trade there, okay? So let's take a look at that on the M1. I just sync these up a little bit. Okay, so this New York trade essentially trying to play that deeper 4-hour pullback back into the premium. So now if we zoom into the M1, obviously there was short trades in London. I'm not going to go over every trade, just kind of want to look at the highest probability, cleanest trade. Now, at this point, right, as you see price push up through the London low, and then we're coming into New York, and okay, I want to look for longs, that's probably the cleanest candle, and you can draw in that zone, right? I had that zone drawn on as well, but I'm aware anywhere within this range is where we can obviously reject from. So instead of trying to guess, easiest thing to do is just look at the M1 price action and just let the M1 tell you when it's ready to show those bullish intentions. So as we come in from kind of the end of the London low and we're coming to the New York open, obviously we're still bearish. We come to the downside, right, making lower lows, lower highs, supply is in control, right, put it back into supply, make a lower low, so it's in control. Now we make a low, we tap into that refined wick, we pull back up into supply, right, into this M1 supply. What does it do? It tries to make a lower low. It fails to break that low, and then price moves to the upside, right? So it's failed to do its job, and this is where supply flips to demand. So as soon as we get that closure above what? Above the reaction, that's when we get the flip, but we also get the chock, okay? So price is bearish, right? That's the lower low, lower high, lower low. It pulls back up, it fails to make a lower low, and then we take the high. So now what do we have? We have our flip, our change of character, our hard time frame mitigation. Boom, let's get in long. You can obviously get in anywhere on this sell to buy that caused the break of the chock and the flip, right? Anywhere basically within this. But obviously, you guys know I try to trade with a fixed 2 pip stop loss on EU. So obviously, for me to have my stop below the low, I had to enter in around here. So just refine it to that pivot candle. Obviously, you could have entered a little bit tighter on the EQ there, and then you're in a super tidy trade. Obviously, the way I would classify this, I would classify that as a sweep candle as well. It took the liquidity below that low. So for me, that makes it a really high probability trade. In terms of targets, obviously your counter trend, so that everyone's trade plan is going to differ slightly. In this case, I think it's a pretty decent counter trend trade because of the available risk to reward you have, right? Because up to premium, there's a decent amount of risk reward there. I mean, with a 2 pip stop, you've got over 20 R to the premium. The next nearest sort of 15-minute demand, really, like, it's a crappy demand, but it's there. To be fair, was it a flip? Yeah, it was a flip zone. So it's a decent level of supply, actually, I should say, not demand. So yeah, I would be taking heavy partials there at that point, if not the whole position. But that's still over 10R for a counter trend trade, right? That is very decent, super clean setup. Coming to kind of the bulk of the New York volume, and then boom, pretty easy one to manage. You're out of that trade in an hour or two. So that's kind of the easy clean trade for Monday. Now coming into Tuesday, this is where you have to think, okay, the easy counter trend trade has kind of done now, right? Because we've had that pullback. Yes, we could still go higher, right? There's every opportunity to be coming up to the extremes. Obviously, there's even the possibility we could switch bullish, but not really thinking that at that stage. More also, what I'm thinking is, okay, well, now at that point, we're around the EQ. I'd rather just be a bit patient here. Do I really kind of want to be longing into this when I'm going against the 15 trend, against the 4-hour trend? We're in premium, we're coming up into areas of supply. Probably not, especially when you kind of see we're quite range bound during Asia. And usually why that's happening is what? Because price is building liquidity, right? It's building those equal highs, that range highs, and the lows, so that price then usually sweeps those lows. Then we get the break of structure, right? The minor break of structure. So now what's happened? Now the 15-minute internal structure, let me open up the 15-minute, has now aligned, right, with the swing trend. Because remember, in this case, for pretty much the majority of last week, both the 4-hour and the 15-minute trend actually had the same swing low and swing high. Okay, so that was both my 4-hour and M15 range. So this whole time we were bearish, obviously, until we took that low there, right? So when we got the change of character the previous Friday, we were trickling up, right? Demand was kind of showing that sustained bullish order flow. Then we come into Tuesday, we generate liquidity during Asia. We then sweep that liquidity. We tap into the EQ of the range, okay, tip to the premium. But more importantly, then what happens? Then we get that minor breaker structure, right? We take that low. So now what has happened is the internal M15 structure has now switched bearish. So now that is in line with the overall bearish M15 trend, right? The swing trend. So now that's a very high probability that the lower high potentially may be in place. Now, ideally, what we want to see to really give us confidence that that 4-hour and M15 lower high is in place, so that we can hold and target with confidence down towards this low to form a lower low. Ideally, we want to see that higher time frame mitigation. Now, at this point, we didn't have that, because if you look left, there was no significant supply over here, right? Maybe something on the 1 minute or the 15 second or something, but from the 15 minute or upwards, right, my medium time frame, my higher time frame, there was nothing there. The only thing that I could see a value that we rejected was the EQ. Now, we do not have to come up and tap a higher time frame supply within the previous leg for a lower high to form. Of course, that is not a hard and fast rule. So what is the other thing that we look for to give us that confidence, give us that confidence that we are going to go from here? Well, one, it's usually a sweep of liquidity. Like I was saying, we build that liquidity during Asia, we sweep it, we then break structure to the downside. So what does that give us? That gives us a new area of supply that stepped into the market. So now that becomes a high probability trade, right? Look for that sweep zone that caused the break of structure, wait for price to pull back into it. Look how nice that was, right? Nice, reasonably impulsive, big bearish candles, and then slow corrective pullback, generating all of that liquidity into this area. Boom, come into the open of New York. That's the easy trade, right? That's the easiest trade there is all day. Now, the minute we came into London and tapped that EQ and you start seeing, like that M15 change of character, we come back in. This is all during London. You can trade that. I'll look to trade that. It's more aggressive. Again, I don't want to keep going on about this. You guys know what the point I'm trying to make here is that this is the easiest trade of the day, right? Because you've just been patient. You've just waited for a clear and obvious structure change, a shift in structure to occur, where there is no really doubt or hesitation at that point. Because yes, we had the change of character, but that's the most aggressive way, right, to try and anticipate the lower highs form. But when we start to get those, more significant breaks of structure, in this case a minor break of structure, a decent movement down, and then a pullback into the extreme sweep zone that took liquidity, that tapped the EQ, that is the easy trade, right? That's when you have, you know the feeling yourself, right? But you have no hesitation. This POI is great. Boom, if the M1 sets up, or even if you want to take a risk entry in M15, yeah, that's the easy trade with clear targets, right? Obviously, ultimate target being that lower low, but you have to be aware because we haven't kind of tapped into that higher time frame supply zone from the prior leg, we may come higher. So take decent partials at the next M15 low, or obviously areas of demand, and pay yourself accordingly. Obviously, you could have pushed this trade a little bit further. It would have peaked down to around this level. But yeah, let's take a look at that entry on the Tuesday of New York. So just sync these up so you can see what I'm talking about. So like I was saying, there was that initial trade during London when we got the initial sweep. We pushed down, we had a change of character, and then we pull back in. And that's essentially around this level here. But I'm not going to look at that. I'm just going to look at the easy trade for now. You guys can check out the markups in Discord if you want to see that breakdown. But we built all these equal highs during the London low. We then swept those highs. Let's open up the M1. All right, tapped in to that M15 supply. Now, as we tap into that POI, what do we want to wait for? We want to wait for the M1 to change character, and then we want to see a flip to get in short, right? So at this point when we tap into here, where is the low that I need to see go? Obviously, I've already marked it up, so it's pretty obvious, but this is what I'm looking for the whole time. I keep it super simple. This is what I'm saying to myself. Okay, where I want to get short has been tapped into that POI. Now I want to see the M1 low go. This is clearly the low because all of these candles break the prior candle's high, so that's all part of the up move. Then we start to pull back, but we never take this high out, right? So this is still my most recent low that I need to see go. Now, the moment we get that chock, right, this is where you're ready to get short, but you need to see where the flip is. Now, you can see I've marked out where the flip is because we have demand. This is the base of the reaction where we react to the upside. So then I mark out the base of the reaction. All I want to see now is price close below that reaction to tell me that that is a failed reaction. And it's that at that moment where we get a candle closure below the start of the reaction. Once we get that closure below, that is when I now have confirmation that demand has flipped to supply. So now the M1 supply is in control. At this point, when we close below it, then I want to see the change of character. Okay, now we spike below the low. So now I have what? Now I have my flip and my chock. So where are you going to get short? Well, technically, anywhere within this range here, okay? Because this is the whole buy to sell range that flipped and changed character, okay? So anywhere within that orange box, technically, is where that supply came in. But obviously, that's quite a big box. I want to have better risk rewards than that. So we need to try and refine this box to where that supply came in, okay? So if you look kind of at the previous price action, we can see these mitigations, right? Price came up, it mitigated this area of lower time frame supply, right? Maybe the 15 second will be a bit clearer. We came down again, we took that low, we pulled back up, we mitigated that area of supply, okay? And now we've pushed down. So for me, because this is the decision, you can see, right? Price came in, obviously there would be some 15-second demand here. Price pushed up, and then that's where the supply came in to really break the low. So that's why I much prefer the decisional in this point. Generally, EU quite likes the decisional anyway. It doesn't always come back from the extreme. But what is the main thing we look for to give us that confluence that price is going to react from the decisional and it's not going to want to come up and mitigate the extreme? Well, we look for, did the decisional sweep liquidity? In this case, it did, right? Because we can see price came down and then we pulled back up. And then this candle took the liquidity behind that candle there, right? And then we push down and all of these candles break the price candles low. So now we have our flip, our sweep zone, our change of character. Boom, you can get short there and then you're in a really, really tidy trade. So it's a standard M1 entry model. There's a bit more of a continuation here, right? I'm not going to mark out every little bit of M1 demand. I'm more looking for where do those reactions happen, right? Follow the money. Obviously, there was a reaction here. Price came up, pushed down. You could have had your entry order here, right? But then what do we get? Follow the money. Price comes into this level. It reacts. Okay, that validates this level. So then you can draw it on. Then you wait for price to break structure, come back in. It's arguably a sweep zone there as well. It did take the liquidity, and then you can scale in. But really, these are the lower probability setups. What you want to be getting in is on that first flip, on that first initial mitigation of the higher time frame. That's always the highest probability trade, okay? So yeah, I just really want to drive that home, that point that this whole time on Tuesday, you're looking for that 4-hour lower high to potentially form, but it's just about being patient. You don't have to jump in on these trades first thing in London, over here. Yes, you can do this and you can trade this, but if you miss it and you think, price is tanking down, it's going out without me, it's going to go all the way to the low, that never happens, almost never, right? Be patient that whole day, come back towards New York, you've got your sweep zone, you've got your POI. If anything, you can just set your risk entry if you want, right? You don't even have to wait for your M1 confirmations. Yes, your stop's going to be a bit wider, but 6 pip stop is still ridiculous. Maybe give it another pip buffer, right? Let's be conservative, 7 pips. You've got over a 5-hour trade there. So decent, right? And you didn't have to do much, pretty hands off, work your 9 to 5, whatever else you want to do, focus on other things. You've got an easy trade there. Or obviously, if you're happy to set your alerts, see the rejection, get the M1 entry, boom, that's the easy trade, job done, okay? Now, going into Wednesday, this is where we're starting to range a little bit, right? We're a little bit choppy, but we are seeing sustained bearish order flow on the M15, okay? Right? We had that trade on Tuesday that we've just gone through, tapped into supply, we come down, we come in, we essentially mitigate this range here, and then we push down again, okay? So now we're kind of playing in this kind of minor internal range here, and we're having a very, very corrective pullback, right? This is lovely, this is what I want to see. Nice kind of impulsive movement down, really slow corrective pullback during Asia, right? Just building tons of liquidity to the downside for us to target. And what do we have? We have a very, very clean M15 zone. Now, I wouldn't, just for those who are wondering, necessarily have my zone just drawn on the wick, right? I don't know that price is going to want to mitigate the wick. I'm going to have it drawn like that. But I'm not just trading straight away. I'm waiting for the M1 confirmation. So then as I see that's where price rejects, that's just when I refine the zone, okay? Now, that was also a sweep zone. You see how it took the liquidity behind that high there. Increases the probability for me even more. Let's scroll over on the M1, have a look at the old entry. Now, look how beautiful that reaction is on the M1, okay? If there was, if I could have a textbook definition of what a V-shaped reaction is, that's it, right? In big orders get filled, massive imbalance between demand and supply. Supply is clearly back in control at this moment. You can see that. Price then comes in. And this is just a standard thing, right? Same again. Liquidation, mitigation, V-shaped movement. We come into demand, right? We react. We try to make a high. We fail to do so. We close below the reaction. So now demand has flipped to supply. Supply is in control. And we get a change of character. So at this point here, right, this bearish candle when we close there, you can literally just get short straight away if you want. It's pretty aggressive, but that is literally more than valid. Now, if you're someone who wants to look for the sweep zone, you obviously wouldn't take that. Maybe you want a bit more confirmation, then what do we get? We get another break of structure. You can see the decisional holds, right? We come into the decisional, and then we move to the downside. So now we have that another break of structure. We have a sweep zone here. You can see how these candles, these inside bars here, price pushes up, sweeps the liquidity that would have built above those highs, and then we push down. Okay, so technically this isn't really a flip zone, but you can see we've already had the flip, we've had the chock. I mean, just look at that. That's all I need to see, right? When I've seen a zone I like get rejected like that, I'm just looking for an excuse to get in at that point because I've seen everything I need to see. I'm just looking for an entry model that makes sense, right? Boom, there's your standard sweep, break of structure, pull back in. You could have got away with a much tighter stop there, but 2 pips has saved my ass more than enough times I can count. I'm happy to kind of sacrifice a little bit of risk reward just to have that 2 pip stop over the long run. That works better for me and my psychology. 2 pips is still insane. Sometimes you kind of have to remind yourself of that, right? Anyway, so that was kind of pretty tidy setup. Obviously, there were more setups within here when we came back up. They're in the markups. I don't want to go over them now. I just want to focus on that same thing again. Where's the M15 zone? The clear and obvious one for the day. Let price tap it. Try and get in that first M1 entry, and then just hands off with your mechanical management, right? Remove risk, whether that's moving to break even. Obviously, I advise generally it's better to take your partials, right? So this is a great example of it where price comes back to your entry, but it's just coming back into where that supply into the market to cause that move. Let it mitigate those orders, right? Don't panic. Draw on your analysis and you can see price is just coming back to mitigate where those orders came back into the market, right? Your stop is more than enough protected. You've hopefully already removed your risk anyway with partials if you've been running over 6R, and then you can target. First obvious targets is the actual structural low, right? Take heavy partials there, or just start partialing out on next obvious areas of demand, okay? Obviously we end up going a little bit lower, and that was just, really, really tidy trade for Wednesday there. Now, coming into Wednesday, I believe there was FOMC, and this is where we see the internal structure switch bullish again, right? As we start to take these highs and push up a little bit higher. Now, at that point, that's when we then run this 4-hour lower high that we thought was going to be lower high because it becomes weak, right? It fails to do its job. It fails to take out this low. So this high here, right? Obviously, we don't really know that it's going to be weak, but at this point, right, as we start to move to the upside and we start to break structure in the M15, that is when we can go, okay, we're probably going to run this high because it's failed to take out the low. So then we come up higher. Now, we didn't quite touch into that 4-hour supply, which would have been nice, but of course we don't need to. We run the liquidity behind that high, and then that's where we start to sell off pretty aggressively during Asia, actually. And this is where we're coming into London, and I'm going, okay, I'm more than happy to look for longs from this area of demand because the M15 internal structure switch bullish. Potentially we can look for that long trade, even just up to these highs, but then potentially trying to target the supply zone here or potentially even higher, right? So for me, even up to the high, that's decent risk reward. So I'm happy to look for longs there. Now, if you took a risk entry, fair enough, it would have been a loss, quite aggressive when it's counter trend. But if you're on the M1 and you're waiting for that confirmation entry, right, you're looking for the M1 to, where are we? Switch bullish here. Right, this is Monday's price action, and this is where I'm sitting there and waiting. I'm just waiting for the M1 to start showing bullish intentions. And this is probably the easiest price action I've seen to just sit in your hands, because what do? We just sustain bearish the entire time. We come into a POI, right? And then we just smash through it. Okay, fine, cool. Come back to New York, or come back the next day if you don't trade New York, right? And this is the other thing as well. Sometimes people do, they go, oh, my level's gone. Oh, no trading opportunities for the day now. I got my bias wrong. Well, actually, if you were looking to get long from any area and you see price smash through it, well, then just look the opposite direction. Well, what caused my level to go? Oh, look, there was the flip. That's where the supply stepped in to cause that level, right, to fail. Well, let's wait for price to pull back into it. Now, of course, you could have looked to play the longs from extreme, blah, blah, blah. I'm not going to go over that. Check that in the Discord if you want to do so. I'm trying to focus on the high probability trade here for the day. So London, you look for longs. This is what I was doing. No set provided. Okay, come back for New York. This is the obvious POI to look for to continue this bearish momentum. Price pulls back into it. Obviously, you could have traded that directly or wait for the M1 confirmation. So let's go have a look. What do we get? Price comes in with a fair amount of momentum. Big V shape to the downside. Wait for your M1 entry model. Let's take a look at that, and then we can short down towards the lows. Okay, so this one is a little bit more advanced. So we come in, big movement, right? We've tapped the EQ. With that V-shaped reaction at this point here, if we were to push up higher, right, that's going to be a flip. This zone is going no matter what. So when I see, this is why when you see a massive impulsive V-shape like that, it should give you a hell of a lot of confidence, right? That supply is in control now, and it's a really, I get a lot of confidence from it. I'm happy to just start looking for sort of, especially on that first correction, that's where I want to get in really. It's always going to be high probability. Even if price seems a little bit choppy and corrective, if it's up here straight away, that's when I'm happy to get involved. Now, if something like this kind of happens a bit further down like here, I'm not really too bothered about jumping in at that point. I'll just be patient. I'll wait for the next day, the next session, or a better setup. But when it's that first one, that's where I'm just, I don't want to say looking for an excuse to get short, but I'm just looking to reprice action. Does something make sense? Can I protect my stop with the risk reward I want? Boom, I'm getting in, okay? So let's talk through this bit by bit. We mitigate supply, we come down. Now, this is the first kind of area of demand I would have been looking at, right? Because this is the nearest low, right? Price moves up, it pulls back, and then all of these candles break the prior candle's high. So that's all part of the up move. Now we come back down. Now, I didn't spot this live, okay? But then we got the change of character. Now, we come in, and then we have a more convincing M1 pullback, right? I wasn't really looking at that buy to sell as a reaction, but now price starts to pull back. So then I do what? I look left to go, okay, well, we're coming off clear this range here. So this validates this as an area of demand because it's reacting, okay? So now what I do is I draw on this level of demand. I see the reaction go. So then I draw on my dotted line, right? Because that's my failed reaction line. So what do I want to see? Well, we've already had the high time frame mitigation. We've had the V-shaped reaction. We've had a change of character. So now all I'm looking for is the flip to look to put my position on, right? We see the reaction go in, so now I'm looking for this orange line, right, this failed reaction line. I need to see a candle close below. We get it with this candle here. So as soon as we get that, I'm then looking for where to get short, right? And it's quite messy, but essentially it's anywhere going to be within this buy to sell range, okay? And as you can see, price again back in, supposed to be drawn like that onto the inside bar, right? That sweep zone up the top, or whether you want to take that whole candle, okay? That took the liquidity, and what did it also do? And this is why I mentioned it earlier, right? It mitigated that reaction. If you look at where price moves from, so these turning points here and here, that's when you can look left and go, okay, does it make sense? Why is price reacted from here? Well, yeah, that's the range demand, okay? That validates that. Why did price spike that high? That led to price closing below the failed reaction. Well, it's because this is where that nearest level of demand was. Price came in, it reacted, and it pushed down. Prices then come up, it's swept this liquidity, it's mitigated that and pushed down. Okay, so now that's an area that I want to get short in. So the moment we get that closure below, I'm just looking to get short, market execute, limit order, whatever you need to do, and then you're in a tidy trade, right? You get another opportunity, right? Price changes character there, and then we come into this level, right? Follow the mitigations. You often get a few chances to get into a trade, so don't panic if you think you've missed it. Look for the opportunity to get involved. And obviously there was a bit more of an advance, not advanced, but a bit more of an aggressive continuation down here. But obviously when price is pretty impulsive, you can get away with these, right? Flip, close below, pull back into the sweep zone, and you are off. Real clean target on this one. Obviously trying to target the actual swing low to go, which we did get a break and closure below on the M15, but we didn't on the 4 hour. You can see it was a bit more of a liquidity sweep. Also, the other thing I forgot to mention is here when we're looking for the long share in London, right, and it melted straight through, and we took this pretty significant M15 low. It's not a swing low, it's just an internal low, right? But what was that also? That was a change of character on the 4 hour chart, right? So when we're coming back into here, that's a pretty good inclination, right? That the 4 hour lower high is now in place because we've had the 4 hour change of character and now we're ready to go, okay? So that was a very tidy trade. I think that was Thursday. Yeah. Now coming into Friday, this is where the 4 hour chart wasn't so clean in terms of because we failed to close below on Thursday. And obviously that's a bit of a sweep of liquidity. And oftentimes when you get that sweep, potentially we're going to have a bit of a deeper pullback. So I wasn't sure if we were going to come up to this sweep zone here, right? That took the liquidity. Potentially we've had a sweep. Now we're going to go up a little bit higher before we go. Okay, so that's one possibility I have in my head, but that doesn't mean I'm not going to look for shorts lower down, okay? Because look how clean this is on the M15. If you just follow the money, right? We were initially looking for this demand that caused that breaker shot to the upside. Price came down and it smashed through, okay? Where did the supply come into the market to smash it through? It came in here. So then we took the entry short. That's the last mitigation. Price took the low, okay? So where's the next mitigation likely to happen? It's going to be in this zone here, right? Price comes into it. Let's look for an entry. Built perfect equals, right? Perfect liquidity during Asia. Liquidity to take. Okay, we see that liquidity. Clear liquidity to target. And obviously trying to take that low as well to get that 4 hour lower low, which ended up happening. And then we got probably one of the, really cleanest trades of the week, which I know quite a few of you caught, which is obviously amazing to see. So let's have a look at this. Zoom in a little bit. So came into our M15 POI. What do we get? We get a beautiful sweep of liquidity. Whoops, pressed the wrong button there. Beautiful sweep of liquidity. Nice V-shaped move, right? Look at that. Up, down. Pretty much vertical. Big, nice impulsive candles for the M1. Zoom in a little bit more. Now, what do I look for? I look for a change of character and I look for a flip. Whereas my nearest low, it's where this red line is. Why? Because we had a movement up. We had a pull back. Then all of these candles break the prior candle's high. Then we pull back, right? So that's why that's my most recent low. We spiked that low. Okay, boom. I'm already saying to myself, what do we have at this point? Literally just this point here at 7:35 UTC, GMT. Forget what time we're in. Yeah, UTC. What have we had? We've had a liquidity sweep. We've had the hard time frame mitigation. We've had our change of character. So now what do I want to see? Ideally, I want to see the flip. But I'm waiting for price to react to show me where the demand is. So price comes down. Now we have a bullish reaction. Okay, that shows me that we're reacting from something in this wick. Okay, so I mark the bottom of the reaction. That's my dotted line. Now, all I'm waiting for at this point is the flip. So I need to see price close below the start of that reaction, okay? Now we get the close below. Now I've seen everything I need to see. Sweep, V-shape, chock, failed reaction, which is the flip. Okay, where am I going to enter? Well, anywhere within the buy to sell that caused the flip. So it's between these orange lines is that buy to sell. I can enter anywhere within this orange box. But it's quite a big box. I want a 2-pip stop, and ideally I want to cover this high. Why? Because that's a structural sweep zone. That's the extreme. I don't always cover that high, but when it's quite near like this and it's quite congested, ideally I want to get my high above that. Now this looks quite big because I'm zoomed in, but I ended up executing this, and with a 1.7 pip stop, that just covered the high. So this is really tight and one range, as you can see. So it looks a little bit messy. Now I've got a few things drawn on it, but hopefully you guys, some of the newer ones can see. It's the same thing every time that I'm looking for here, right? Put that line back on. It's all about getting a hard time frame narrative right. Last week it was pretty easy because we were bearish on all time frames. It was very, clear bearish impulse to the downside. Then we had a big corrective pullback on the Friday M15, and the shorts were always the easy trade, right? The M1 entry model, then it's just the same thing. Once you've got your hard time frame POI, now it's just about looking for liquidity sweep, V-shaped movement, chock, flip. Okay, refine your entry zone a little bit. There's a sweep zone as well, which makes it high probability that we're not going to come to the extreme. Boom, it happened quite quickly for me, so I just ended up hitting market execution, stop above the high, end up getting it with a 1.7 pip stop. You can see that was enough to be protected. We did actually come back up and mitigate around that extreme, and then we pushed down. There was some continuations within here, but price was pretty choppy. But again, just showing you the easiest trade is always entering on that first mitigation, because you can get away with being a little bit inaccurate at that point and having a stop reasonably well protected. There was a hedge I took as well around, there was an M15 demand zone here. I posted this in the EU analysis channel if you want to have a look at that. But very simply, we came in and we got failed reaction, right? Failed to make a lower low, pushed up, and then I got long here, quick loss. But for me, it was worth the risk. And I took the majority of my profits off around this level as well, actually around 10R, because we were coming into NFP. Obviously, at that point, it was pretty high probability the daily lows were going to go, 4 hour low was going to go. But why risk the profits at that point? Had a great week. Pay yourself. There's no point, you're going to be pissed off if price shoots up and stops you out. It's just a bit unnecessary, in my opinion. So left a little bit of a runner. going on there. So yeah, that kind of wraps up last week's price action. Hopefully you guys took some value from that. I think it's a really good exercise just to, if you do have those lower time frame entries, just to kind of focus on what was the one trade of the day from that M15 POI, mark those up and just study it accordingly. Or of course, look to see how you could have traded those with risk entries as well, if that suits your personality or your style or your approach, or maybe you're busy with a job or whatever. Yeah, don't think you have to trade the M1. You can get amazing risk reward. If you had it entered on the EQ here, stop above the high, you would have got even better, probably total R. Then getting that M1 entry there on Wednesday, I believe. So anyway, I'll leave that there. Let's do a quick outlook for the week ahead on euro dollar, and then we'll cover the outlook for pound dollar and Aussie dollar. So monthly chart, as we know, quickly go over this, right? Kind of following this series of mitigations, we are pretty heavily bearish, long term. We've come into the supply level, we pushed down, we've come up into this supply again, and we've held for now. We've pretty much had that kind of monthly change of character. Press the wrong button again, there we go. But that monthly change of character, so potentially we're going to come down towards these levels or take these lows, who knows. I'm not going to get too caught up in long-term monthly forecasts, especially when I'm not really trading on that kind of length of time. So weekly chart, you can kind of see the same thing, right? We're seeing that sustained bearish order flow now with supply really taking control, and then we finally got that weekly bearish trend change back at the start of last month in October. And we haven't really moved much on a weekly chart, to be fair, for the last month or so. But really, I'm just expecting this to continue to trickle down into around this next range demand level around here. There's potential we could push up a little bit higher before that. Maybe we'll take these lows and come back into a region like here. There's always that possibility. But yeah, the weekly chart is pretty simple, right? Daily chart, super clean price action as well. Interesting thing about the week ahead is just because after NFP we obviously retrace that move, and this ends up being a run on liquidity on those lows, right? We failed to close below, and we've come back in. So it becomes a question: is this just a short-term move, right? It's just a little bit of a spike. Potentially we're just going to kind of come up maybe into this region, or maybe mitigate something on the 4 hour up here, and then we're just going to come down, right, and actually get that true break of structure. Or is that enough of a sweep to actually go, well, this lower high here, it's failed to do its job. I mean, it's not even a confirmed lower high anyway, because we haven't got that closure below. Remember, we need a break of structure to confirm the lower high. But at this moment, theoretically, this is a weak high. And it, in theory, could get run because it's failed to make that low so far. So as long as we don't close below this low, we can run with the assumption that this daily high is weak, and potentially we're going to come up higher, come up towards the EQ, potentially mitigate this inside bar. I don't think we haven't mitigated that inside bar just yet, or potentially come up into some regions, up into around here. So do bear that in mind coming into next week. So far, we do technically have a weak high here. So if you do get counter trend longs, there is the possibility we could be coming up higher, okay? But that doesn't have to happen. We could literally just tap into here and die. As you guys know, I don't get too caught up in predictions. It's more just outlining the possibilities that you're aware of, and then allowing structure to align with the direction in which you want to trade. Let your POIs present themselves, and then, just look for your M1 entry models. So for our chart, it's very, very simple. We finally did get that close below around the NFP, or on Friday, I should say, and we did get that break of structure. So the current swing range we are playing within is this level here. So this is what I was saying. We may just be coming up into the extreme into this week. Look for that lower high there. That would be super high probability to then try and get that next lower low. We have had a bullish change of character, right? We've taken this high, we've tapped back into this demand here, right? Tapped into that demand and we moved up. So potentially that's going to give us enough to come into here. Obviously, if we break and close above that and the 4 hour switch is bullish, if we get that, I would have a lot of confidence that we are going to run that week daily high at that point. If we get the 4 hour switch in bullish, I would be trying to target that high, potentially coming up in towards these regions up here, okay? But we can cross that bridge when we come to it. So let me keep it super simple. No need to overcomplicate it. The 4 hour is heavily bearish. However, we're kind of sweeping these lows and failing to close. We've had a bullish change of character, so we can look for longs Monday and Tuesday, right, to push this up into more of the premium of the range. Although that said, if I actually draw on the premium and discount tool on here, probably, we're already in the premium because it's quite a tight range. So this is where we're playing within a much smaller range than we had last week. We're already in the EQ of it, and this is very often where you can see quite choppy and range bound price movement. So if we do get that, don't get too caught up in it, right? Play the extremities of the range, sell in the top 75%, buy in the bottom 25%. If we see kind of like price action like this that we got the other week, right? That's where you need to be a little bit more nimble and be happy to trade in either direction, right? But keep it no, I always try and keep it as simple as possible. We're bearish. Let's see if price can come up into that supply zone, tap into there and get a lower low. If we do break and close above there and for us, which is bullish, I'd be reasonably confident we're going to take that high, okay? But of course, we can still look for shorts from there in case we don't. And it's just a bit of a liquidity grab for these highs there. 15 minute. So yeah, for me, we've switched bullish. We've taken the swing high there. We did pull back and then we got another break of structure. So for me, because that is a sharp pullback, but more importantly, it's about 20 pips, right? So that for me is swing structure. Usually I like to see a minimum of 15 pips on the M15 for euro dollar. That's a pretty good kind of general rule I have. So now we're playing with this M15 range. So very, very, very simple forecast for Monday. Be looking for price to come into around these regions to look for longs to push this higher up and towards that 4-hour premium and supply. Now, one thing, especially for the new guys, if you're not aware, obviously highest probability to look for longs is to have that refined POI to one candle. I like this one as well because it kind of swept liquidity behind this low and this low as well. But I'm also happy to trade ranges. So what I mean by that is I'll have my charts drawn like this. But say on Monday morning, price comes down like this on the M15, and then it doesn't tap the zone, but we see like an M15 change of character. I'm happy to then get involved, right? I don't have to wait for the refined zone to be hit because I understand that we're probably just, rejecting the refined buy to sell, right? Remember, price has no time, time does no price. Like if you jump up a time frame and we go to say the 30-minute, right? You're just refining, it's just reading order flow going through the market, right? By drawing this pivot here, what is that going to be in 15 minutes? Probably going to be a couple candles, right? Then if you were to go to the 1 hour, right, and you were to draw on, I'm not going to do it, you guys know what I'm on about, right? But essentially, if you were to draw that, right, 4 candles, that's going to be the hourly candle, okay? So I know if price comes in and it changes character, it didn't hit my refined zone, I'm happy to get involved. Now, you don't have to do this. You can have in your plan, and I speak about this in the course, you don't have to do this. You can have, no, I'm only going to get involved if I hit my refined demand zone, and that's fine, okay? Because this can happen. You can have that move. It can be a fake move to do what? To generate liquidity, to then come into your refined zone, boom, then we go. But I'm happy to trade both. I'm happy to trade this move, and I manage accordingly, and I try and remove risk reasonably quickly because I'm aware price could come lower because there's still unmitigated demand below, right? And then we go. But I'm happy to trade both. But I just wanted to point that out there that if you see my markups, say Monday morning, or whatever, or any time, and you see that I have my demand drawn on a refined candle like this, but then potentially we don't reject it, and then you see me in a trade here, and you're thinking, well, why? That's the reason, because I'm letting price actually show me the way. If we start to reject and move higher, I'm just going to refine my zone and understand that we've rejected the range, okay? So hopefully that point is clear. But if you don't really get what I'm on about, drop me a message. I'm more than happy to kind of go into that in a little bit more detail for you. So yeah, very simply, looking for some longs coming to Monday morning if we remain bullish, and we can start to look to push price up towards these extreme levels. I'll have a quick look at this, a few flips over here. So this is the kind of thing I'll be doing, right? Looking at this, where did kind of demand start to fail and supply come in? And again, you can take the refined candle like this, but because it's such a tight range as well, I'm just more than happy to take that whole buy to sell range like that. And they're the kind of levels that I would be looking at coming into next week. So yeah, that's pretty much as simple as I can keep the forecast. Let's take a look at pound dollar and Aussie dollar. So you guys know I don't actively trade this, but I do kind of give a quick kind of brief overview of the higher time frames and some kind of POIs that are looking reasonably good to me. But of course, I only look at this literally on the weekend. I'm not looking at this day in and day out. So these forecasts are a bit more of a brief overview kind of compared to euro dollar. So weekly chart, we're coming off that kind of extreme level of supply, beautiful nice sweep zone. We tried to make that higher high, right? When we pulled back, we kind of just swept that high, failed to close above it. That becomes a weak low. We've now taken out that low, but you can just see that sustained bearish order flow. We came into that level last week, and now it's looking like we're pretty much definitely going to take that low. I'm really kind of looking for price to come down into around, or at least kind of this, it's a bit more of a monthly level, but this sell to buy, we just tapped into that now, kind of this whole region, a bit more refined, would be this level here, okay? I am expecting the weekly chart to continue to sell off and continue to see that dollar strength. How low will go, I'm not sure, but that kind of would be my next weekly target. Daily chart, you can see that bearish order flow even clearer, right? Once we finally took a while, took half a year, but we got that bearish lower low here. Came back into this level of supply, really nice clear area to short from. Kind of gutted I didn't just set a nice risk entry on that, nice limit order and just let that play out. Played out beautifully, came to the level of demand, we flipped, come into this minor area of demand here. So you can look to play counter trend longs up into this level, but just be aware any reaction from this point is likely to do what? Just to build liquidity for price to then come in and run those lows there. So yeah, definitely can look for those counter trend longs, but the more clean, high probability Shorts would obviously be around this region or potentially even the zone here, which I haven't drawn on. Just looking for those lower high continuations to run these lows. Price action in the previous legs pretty messy and choppy back then. That was kind of coming into around the Brexit deadline at that time, so it was very kind of news reactive at that point. But if you kind of follow the mitigations, trying to make a little bit of sense of it, you can see price came in, mitigated that, pushed up and broke structure, came back in, mitigated this level here, and then pushed up, and then it never really came back. So, you know, potentially this inside bar is kind of half being mitigated here, but something within these wicks, that's kind of the next sort of daily level really I would be looking at there. But of course, as soon as we get that daily break of structure, if we come down and then we start to change character, then you can obviously try and start to play those counter trend daily longs again. 4-hour chart, so obviously heavily bearish. We have come into that extreme demand. We've had a bit of a reaction. We haven't had a change of character yet, but if on Monday we do get price breaking above that level there, here, that would give you a bit more of an indication that potentially we are then going to push up higher, up into around this level, which would be a lovely area to start looking for those shorts. But you know, it could sell off from here, or it could sell off from these buy sell wicks, right? So just keep an eye on those more aggressive levels if you wish to do so. But yeah, if we get that 4-hour change of character, there's absolutely nothing wrong at all playing those counter trend longs back up into kind of this region. Up around there, yeah, that's really it, to be honest. 15 minutes, not too much going on that I'd really want to add there. Ideally, before kind of look for those longs, probably want to see these highs go, something like that, pull back into the demand that caused that flip, and then you can start to look to try and push price a little bit higher. But yeah, these would definitely be my main focus going into the tail end of the week if we can pull back up and towards this region to look for those shorts. Nice 2 sweep zones there nested within the 4-hour zones, and yeah, I'll just be looking for that. Play the longs potentially if we get that pullback at the start of the week. Look for that daily and 4-hour lower high, and then look to see if we can get that kind of weekly and daily lower low pushing down in towards that region. And then last but not least, we have Aussie dollar, which is kind of a bit of the odd one out in the dollar pairs in terms of the Aussie was stronger than USD. Obviously, we've seen the other 2 pairs. USD was definitely a lot stronger. But yeah, let's keep it simple. Kind of similar to those pairs, we came off those extreme levels of supply. We pulled back, but we've come into this area of demand. And it's kind of that question, are we now forming a higher low to go on to take those highs? Or is this just a reaction to do what? To build liquidity, to now run these lows and come potentially down lower into this region. And more of that kind of long-term monthly bearish trend is going to continue, where essentially we're viewing that as a lower high, price pulled back, came to extreme, and now maybe we're coming down lower. I'm not so convinced on that, but for now, we've come into demand. We had that change of character. We pulled back into that weekly level of demand, and we got another break of structure. So for me, the easy trade or the easy way to view it, keep it simple. We're coming into around this region, push up, and we can start to look for those trades to run up towards those highs like that. No need to get too overcomplicated with it. Daily chart looks a little bit messy, but bear with me, you'll see what's going on. So we came into that level of demand, nice big V-shaped reaction. We got that break of structure. We switched bullish. We pulled back into, didn't quite hit the extreme, right? So we do still have an unmitigated level, but of course you don't need to. Got that change of character, gives us a good indication that now the high low is in place. We can target that weak high. Why is it a weak high? Because it failed to take out the low. And then we got our double break of structure, forming our next higher high, really confirming that that bullish trend is now in place, at least on the daily chart. But we can see following the mitigations here, right, we've come into this level of supply. And then last week, we failed to close above that high. So that was a really good indication, remember we were talking about this, that we were going to have that deeper pullback at that point, right? Because we got that sweep of external range liquidity. And that means generally you'll see a much deeper pullback at that point. We did have this decision area of demand. We can see on Friday we reacted, or Thursday or Wednesday, whenever that was, pushed down. So technically we do have a flip now. And we could potentially look for shorts into here, start of the week, to push down in towards here, and then potentially see if we can get that daily lower high, or maybe we're going to switch bearish again. Who knows? But pro trend would be to assume we form a daily higher low around here, and then see if we can push up into around these regions here. Let's take a look at the 4-hour chart. Here we go. So 4-hour chart, the way I've mapped structure, I've had the trend the same as the daily chart, so that this is my 4-hour swing. And the way I've got it marked out, because we did pull back here, but like I said, we failed to close above the high. So that became a weak low, and this is still the strong swing low down here. So this is the range pretty much we are playing within. Now, once we got that external range liquidity sweep, right, we have all of this internal range liquidity essentially to be swept, especially once we got that 4-hour change of character here. Boom, you can see that momentum. Now look for those shorts, right? Follow the mitigations. Obviously look for the longs and look for the shorts, because any of these areas of longs could end up being that pro 4-hour and daily high low, and then we can start to look to target that high. But as you can see at the moment, supply is pretty much in control with the recent price action. So we have had, to be fair, we've come off a sweep zone, demand zone here. We have had a bullish change of character, so potentially, right, we can start to look for longs to anticipate that high low may be in place. But I would definitely still be looking for those shorts, especially with this daily flip and 4-hour sweep zone, to potentially trade those lower. So just trade both direction, manage accordingly, leave a little bit of volume, I would say, on your long trades, because that is pro 4-hour daily trend, and potentially we could be going up higher from there. But you can see the POIs I've got drawn on. Yeah, that's kind of as complicated, I think, as the forecast needs to get. Here's kind of the M15 zones as well. We can see we mitigated that 4-hour zone during NFP. We then got that bullish trend change. We did, let me just see actually, because that's the high there. Yeah, we did close above it. So for me, that's a bullish trend change. So I'd be looking for kind of these areas here to potentially trade longs up into that 4-hour and daily flip zone there, with the potential that obviously the pro trend could take over at any point. But I'd also be happy to look for those shorts in case the daily and the 4-hour chart are going to have that deeper pullback down into around this region. I mean, there is the possibility that, you know, the low could go as well, but let's keep it simple, right? We assume strong lows are going to hold until they don't. So that is the range I would expect will hold for the coming week or so. Okay, that wraps it up. Hopefully you guys took some value from that. Yeah, don't think there's any housekeeping announcements or anything I was meant to tell you guys. So with that said, hope you guys have a good week, and I'll see you in the next one. Cheers, guys.